issues that Islamic accounting with the conventional accounting are not at par. So we have, we need to, it's like a current issues need to be addressed in the future. But today I'll just present what are they, okay? Some of them, not all. So what we have here, okay, the first thing that when the Islamic accounting or Islamic finance emerged, usually the first thing started Islamic banking, okay, if you know that, from the 1970s. And when we start that business or that industry, people start asking how to regulate these accounting or these financial institutions. So what happened is that you can see that they talk about we have two options. We can use the Sharia compliance approach, or we can use the Sharia-based approach. So there's two approaches available for us to regulate the industry. Those who choose the Sharia compliance approach this approach was favored by the regulators, usually the OAFI, the governments, agencies, or in Muslim worlds. Yes, they kind of like the compliance approach rather than the based approach. And then they justify the reason. They justify why it is we have to go this route. The main reason, they said, accounting has no religion. Accounting is a general a skill, nothing to do with religion, and therefore we can use Islamic accounting, or whatever Islamic accounting can do should adopt IFRS or adopt the conventional accounting. Of course, now we need to challenge this. This is not right. It's wrong, and we need to. I will show you. I'll try to show you why, and also what needs to be done in the future as a student in the, let's say, in the master and beyond. This argument, who says that Islamic accounting has no religion, or generally accounting has no religion, create a confusion among the community or those who are involved in Islamic in general, and especially Muslim accountant. So this confusion created what you can see. There's two views now held in the Muslim world. One, they call it the regulator's view versus the academic's view. Academic compliance approach. And then the argument they put doesn't make sense. So the academics start writing critics, criticizing this approach and saying this accounting standards, or there's no Islamic financial institution. So it creates confusion. But now, for the sake of our lecture today, I'm trying to bring these controversial issues at two levels. The first, they talk about the meaning of Islamic accounting. What is the meaning? What's the definition? How to define it? The second, we try to explain or try to show you how Sharia-based accounting is different than the conventional. Why conventional or IFRS cannot use, or they are not in compliance with the Sharia-based accounting. Yes, it is okay with this approach. It's okay with the compliance approach, but not with the Sharia-based. Okay, the first one is what's the meaning of the Islamic accounting? If you read the literature, especially those written by the white or Westerners, they always say there's no such thing called Islamic accounting because they said there's no coherent or homogeneous practice throughout the Muslim world. I'll show you next slide what they mean by that. So there is no comprehensive definition. Okay, so they said that's their argument. They said there's nothing called Islamic accounting, and then they said we look to the history, we look to the archive, we dig out all the documents, we could not find any coherent or homogeneous ideas or practice like the Italians, for example, or double entries and so on and so forth. Okay, so that's one thing. So what happens now, however, they said the best thing we can consider Islamic accounting exists in terms of the rapid growth of contemporary accounting and financial practices. So they said accounting or Islamic accounting are those practiced by financial institutions. So banks today use whatever they use. If they said the Islamic bank, that means their accounting must be also Islamic accounting. So we take it that way. So we leave that. So now, if I want to argue against this argument, this point, if you need to first define accounting, we need to define it in two levels. The first one, the religious sense, the Islamic like religion text, the reference from Islam. And the second, you look to the modern literature. So you find two different definitions or two different arguments put forth. So what you have, the first, with regard to Islamic resource, Quran and Hadith, you'll find Islamic accounting has been actually, kind of enshrined in this, in the main source of Islam. And then I'm just going to just to save the time, I'll take about two fundamental concepts. The first one is accountability. Islamic accounting is mentioned in the Quran in the form of accountability. And accountability takes different forms, even better and wider than the secularized notion or the meaning of accountability in conventional accounting. So accountability basically is almost attached to amana, and you will be judged in the hereafter. Remember last lecture we talked about the maw'id, the death, and Hijr was talking about how important for anybody, even organizations, to consider death as a medium or as a value that it will kind of improve our behavior, control our behavior, not to be greedy, not to be, so we know we're going to die one day. But in Islam, yes, we're going to die, but we will have another issue that will be judged. So there's a judgment after death. So that's the accountability in our foundation, which is part of the Islamic accounting. The second one is the hisba, or muhasaba or hisab, which is also related to how the day of judgment, you will be ultimately accountable or judged based on what you have done. And that actually, throughout the history of Islam, this accountability and hisba, Muslims, businessmen and accountants, actually they are kind of internalize these values when they start practicing accounting, okay? So now you can see that the notion of Islamic accounting or notion of accounting in under Islamic, from Islam point of view, it is very much a primary accountability to Allah. So accounting, basically the person, he's trying to be very much fair and just, not maximizing the wealth or not making sure you serve only one party, for example, shareholders alone. And notice now, I just changed this one from the last the one I gave you. Actually, the debt holders is the second, the accounting care about. And then for the stakeholders under accounting, conventional accounting, stakeholders have no rights, or they are not actually considering their rights or their, whatever they, their kind of claim, except the environment. They are, to some extent, they are looking for the environment as, they can respond to it, but within the profitable business line. So now for the critics who criticize, they said there's no coherent and homogeneous body of ideas and practice of Islam. And then they use this example. They said, if we look to Bani Umayyah in Andalusia, Khilafah, and you go through Cairo, the Fatimite Khilafah, and you go to India, Mongol Empire, all these are Muslim, time. And you go to Java and Sumatra, practice of accounting. If you look to the practices from all throughout the time of Islam, you'll find you are not find them coherent. there's no, like, some use, for example, a wa'ad, promise, some use written, some use, so that there's no such thing. Like they said, we couldn't find a bookkeeping records, whereas the interests and the business deal has been kind of documented. But what I'm thinking now, I want to respond to this critic, Islamic, this is response. What happened, you can see now that actually Islamic accounting is not a practice. Double bookkeeping or bookkeeping, actually it's just a practice. It does not have a theory or doesn't have philosophy underneath it. So recording is not an accounting. That's what the number one confusion. What Islamic accounting is about is actually care about the contractual relationship or partnership. For example, murabaha, mudaraba, all these things, but all from the Umayyad time until today in Sumatra and Java, Islamic accounting, they will never recognize, for example, riba. Never take it like in one time, take it in, for example, one period of time and reject it. So they are consistent. So Islamic accounting exists, but in the formal of through, in very fundamental values. So you have the temporal, for example, this is what they said, there's a temporal and spatial, which is location, always consistent in Islam. So there's no riba, no gharar, no all these things. So that's perhaps, how to respond, or my response to those who argue that Islamic account doesn't exist. So even by saying that, what I'm suggesting for you or to you is that, okay, let's keep it as, we said, okay, we still have to study the issue. So now Islamic accounting still open for challenge and studies. So let's say, okay, maybe future studies, future students like you can read more on political fiqh perspective. So we need to see what's the role of accounting in the Islamically governed society. Okay, that's a different. So if you are within the Islamic, governed society, now you can later really come up with a better concepts, understanding, or conventions of what is Islamic accounting. Okay, so this is things that have not, we cannot deal with it today. The second part, if you look to the accounting, Islamic accounting in the modern literature, actually what they do, you can find there is two issues. Some of them argue that Islamic accounting or Muslims should really follow the Western kind of ex-colonial power, which means that if you are in colonized by British, just use British accounting standards, and if you are use, for example, Spain or whatever, so you just follow the colonial and move on. Others, they said, no, we should actually go back to the golden age of Islamic and try to really embrace or research and look to what's the best accounting, Islamic accounting that the political, economic, and social practices bring to us. But now who decide? It's usually not, of course, not the students or lecturers or university. Now, those who are interested in Muslim countries, means the government. So now, those who are govern the Muslim world, they have to decide. You see, now they have two approaches, those who govern the countries. Either they adopt the conventional accounting, I call it secular, non-Islamic model, and then they take everything, the whole sum, the whole thing, means they basically take the philosophy, everything. Or you adopt them, but you adopt the same model at the beginning, and then with the gradual modification to suit local culture and economic capabilities. Okay, so with this model, almost these two arguments, whether you are taking this or taking the other, you have three models or three oppositions. Muslim world, it can be classified. So the governments throughout the Muslim world, they have three positions. One of them, they are totally hostile to any Islamic accounting. They are not, or Islamic business. So they are totally taking the Western model. And I give example is, for example, the Egyptian military junta. They are definitely not considering Islamic accounting as an alternative, or they want to coexist with it. But those countries which always anti-Islamic, you'll find them very much hostile. You'll find them that the quality of governance are very poor. Level of corruption is extremely high, spread and everywhere. And the position towards Islamic politics is very much hostile. So look to any countries in Muslim world, whatever government they are, if they have these characteristics, the three elements, you'll find that Islamic accounting will be very much suffer, and they will not be welcoming it. The second position, which is other countries take, for example, Malaysia, they are actually slowly going towards the secularized economic model, not the other way around. They're not going towards Islamic accounting or Islamic practice. They are actually going away from it, but they are taking a slow, slow pace in order to bring the people, with them to it. So neoliberalism is actually replaced by Islamic thoughts and Islamic ideology. And then the characteristics of these governments, you'll find them also with regard to quality of governance, you'll find it poor and descending, this very much in Malaysian model. Corruption high and also increasing. It's not that they will run, not decreasing. And in regards to their position towards Islamic politics, they're very hostile. So they cannot also allow, Islamic parties or allow Islamic organizations to rule or to take any credit for running the country. The last model, which is I will classify as Indonesia and Turkey, they are actually almost taking, the governance quality is fair and potentially improving. The level of corruption is reduced or in the process of being reduced. And with regard to Islamic politics and Islamic accounting and business, so they are actually coexist. They are not, anti-Islam. So they are allowing Muslims or Islamic organization, Islamic thought to develop. So that's now with regard to whatever you read in modern literature, you'll find these three, whatever comes in front of, either one of these three. So again, so I will leave it. So if you want to understand the Islamic accounting in any country, you just look to the political and social and economic landscape of that country, then you can sense the level and the meaning of Islamic accounting in that particular part. So, but it still can be addressed or can be studied in a more details, on comparative method. So those who actually in favor, let's go to now the second part of this lecture. So which is about the Islamic compliance versus the Islamic based. What we can see that Islamic compliance, the question why those people follow Islamic compliance. First of all, when at the beginning, when OIF started the standardizing, they realized that they have, for example, that they said, we can create, this is what the OIF was saying in their own literature, we can start with having kind of special Islamic accounting, nothing to do with IFRS or conventional accounting, or we take wholesome, we take exactly the IFRS standards, but we modify it, kind of gradually, or we take some guidance, improve it somehow to fit Muslim world. OIF took this approach. So they took the approach where that they can take they said we take create Islamic accounting, but based on IFRS. Sorry, they took first approach. Okay. Country like Pakistan, Indonesia, this is a third way. They said, okay, we will take OIF, but also we will try to modify it further to fit our need within our practice in Indonesia and Pakistan, and so we are not going to take OIF as it is. Like Bahrain, they took everything from OIF, but they said we're going to have another modification. And which actually they call it, for example, Indonesia Gap, stroke Islamic, or something like that. So these three positions, all of them, they are not Islamic based yet, but they are kind of modified Islamic compliance. But some of them eventually will end up with Islamic-based accounting. So why those countries like Malaysia and Saudi adopt IFRS and do not adopt OAFI? So if you look to the literature, you find there are 3 reasons they put. The first one, they said actually that IFRS conceptual framework does not conflict with Sharia. They said all of it comply with Islam. So IFRS for some reason Islamic. There's nothing to do with it's not against Sharia. Of course, this is wrong. It's not true. And of course, unless they don't understand Islam or they don't understand what is the conceptual framework of IFRS. So there's a problem here. The second argument, which is always they throw it at us, and you can't always, they argue number 2. They said, actually, accounting is a secular, neutral skill and nothing to do with religion. I don't know whether you can see this. Nothing to do with religion. And therefore, Islam does not ban or forbid you from using this kind of secular skill. Again, this is wrong. The last point, which is perhaps more accurate, IFRS, those who are, the International Accounting Standard Board, they put pressure on Muslim countries through G20 and through any meetings they have to force them, to coerce them to adopt the IFRS. If not, they will be kind of, sanctioned, or they will not be legitimized as a good government running these countries. So that's what actually happened. So there's a lot of pressure from the colonialists, remaining on the Muslim governments to adopt. So that's the reason. So now I want to kind of sum up or close the argument, or the what they call this one. Just summarize the why Islamic based accounting will not be compliance with IFRS. I put 7 points. There's more. Actually, I just published a paper on Forex, how the Forex hedging on by Muslim organization is now in violation of Islamic rules because they follow the IFRS. This is a Malaysian-based study. Inshallah, I will send a copy of it to Brother Novel, who can share it with you. But now I'm just summarizing these ones. So you can see now there's a dilemma. IFRS have a different view on measurement, on what's the meaning of uniformity, on substance. You remember substance over the phone, you take that, on leasing and elsewhere. The valuation, fair value, historical value, or current value. Islam has a different view than Western do. Time value of money definitely is very much, Islam ban it, but it's very much time value of money. This is very fundamental now, fundamental value for IFRS. IFRS, all accounting standards almost recognize this as an economic, approach. So also we talk about the Islamic, some items in the financial statements, they are not equity, and they are not a debt or liability. So there's a quasi. So how you deal with it, and then it's different recognition. When you recognize revenue, when you recognize liability, this perspective than the IFRS. And also, what's the difference between when you report the dain or the loan? So recognizing and reporting dain, that means also this establish a lot of duties and obligations. I'll go over them in a just kind of quick, but not in depth. So just to give you a flavor of what is happening. So to start with, measurement in, if you read IFRS, they said the fair value of any items will be measured or should be measured in economic sense. They call it economic sense. Basically, it has to be the present value, means the expected cash inflow. So you kind of change the value over time. So when the interest rate change, when the value of that item change, you need to replace it, change it based on the interest rate, In Islamic, they said, no, it should be based on the market price or the current value. So market price, or this is the ultimate valuation or the best valuation approach or current value. Okay. Now, the difference, if you're using present value and you want to calculate now the zakah for this investment or inheritance or profit on loss, according to Islamic point of view, that if you use the present value, doesn't make sense. Okay, so you need to use perhaps the exit price or the current price. So that's number one dilemma. The second issue, now in Islamic Sharia, they adhere to the legal form. So why is this important? Because when you have an asset and belongs to you, should be should be recorded in your own assets, in your financial statements. And if it is, that means it's yours, and then you can establish rights and you establish duties on it, especially when you start like calculating the profits and loss against this rented or this leased assets. In Western, you transfer all as long as you are like, when you release that asset, all of it will go to to the lessee. So that means the lessor will not be responsible or not, record any risk or rewards unless they get the profit out of it. But generally, in Islamic point of view, the substance over form, the Islamic accounting consider legal issue as traditionally used to be done previously than the substance. Okay, so the third issue, the fair value and historical cost. Here, now in certain items, Islamic or IFRS, there's no fair value. It can be established because if there's a market or there's no price, so you need to follow standard some procedures. You can see, for example, in IFRS, they give the three options. The first option, I just changed the order to make it just make sense or flow. First, they said fair value on any items can be assessed against the present value of future cash flow of any liabilities or assets. So this definitely is not compatible with Islamic, because if I want to price something, I should not have, for example, I lend money to someone. In the conventional, what you need to do two things. First, use accrual base, means that I expect interest coming for in your future, as long as the debt exists, and also I can discount this. I can form the value of that asset or that debt. This is not right in Islamic point of view. So the second issue, they said if there is no market, no active market, there's no value, you cannot really value it, So what you do, they said you can use appropriate discount or premium, applied. So I said there's no, not really against Islamic Sharia, because it's become pricing mechanism. So this approach can be used, as a fair value also in Islamic. Sometimes in Islamic accounting will accept this. The last one, market price. This is what the IFRS said. If you couldn't find, and there's a market price fairer than using the p-value, then you can take this issue. Okay, so the compliance, comply with Sharia. But still, we will. There's many items that will come now. From this point, you'll find that the rest of the issues will be related to the fair value. So without going into details about time value, it's not acceptable in Islam, because renting money or money cannot be rented. And why? Because money is just a matter of exchange and not a production factory or factor of production. So money cannot produce money. So that means whoever requests the money from you, you must engage in that, in the business, rather than just giving the money and transfer all the risk to the person who need the money. So you are basically taking risk in terms of profit and loss. Now, because of that, the receivables and accruals and calculating the discount on money that has not been returned to you, it's not allowed. So because I'm talking about Islamic bank here, or bank, what they do, if they give you money or lend you, basically, if you don't pay, they automatically will calculate interest. And that's what they do, so this is part of their, kind of business. In Islamic, you don't do that. You cannot do just, calculating discount on unpaid or delayed, or someone has to pay a bill and they have not, then you put 5% on their, unpaid bills. This is not acceptable. So without going into details, I mean, already why is this not important? Because again, it's not, the fair value and impairment, can be used, but only for, as I said, and a pricing method. So if you want to buy something and the bank want to buy the item would be like this. Sometimes they put an interest rate on it as part of the pricing. In Islam, it's okay, you can take it. You can take that, as a fair value, but not necessarily you take it as, rewards or for calculating your profit and loss, but for pricing and guidance only. This, I put it here as just a caution. Okay. So how about quasi equity? This is very important. I'm just speeding up just to allow you for some questions. So what do we have here? In Islamic, the nature of it, Islam operates on based on profit and loss sharing. That means customers will, or the clients, or who they put deposits, all the deposits given to the Islamic bank will be classified as, let's say, some would be invested for investment. They call it, you remember we have restricted investment holder or unrestricted. So basically, you will be given you deposit the money, and the bank will invest that money because it's just, according to the contract with them, either will be restricted or unrestricted, or will be just you put it in for current account. So we're not talking about the current account. Talking about if the customer requested or wanted this money to be held for a while and invested. So now what happened? Now these money, or the money which is in hand, or how do you classify it? First, this money is like trust, and at the same time they are not liability. Means that if they lose some of it, the owner will share the loss. So they are not equity as well, because it does not belong to the bank. So because of the nature of these contracts, and also IFRS can treat all these investments. If someone deposit, he said, according to IFRS, all this will be treated as liability, 100%. But this does not really reflect the essence of accounting. Accounting should be, you follow accounting standards, should give you transparent and give you exactly the, measure exactly the liability and all the, and assets in a very much, precise way. So conventionally, it's not right. However, OAFI or other those who have adopted OAFI, they create something different. They bring something to kind of quasi equity approach. So what you have is that the reflection or the financial statement will look different from each other. So what you have here is that those who argue, some argue, they said we should leave the, we should bring or show or classify those items, investment items, because investment accounting, investment account holders, we put them as an equity. We show them as an equity, because at the end they are the one who managed by the bank, and then the bank can later pay back whatever remaining. But still, again, it's not really, does not reflect the true contractual relationship. So what you can see now, they settled that it has to be for example, if you are following OAFI, you'll take all the money deposited to you, assets, for example, the money given, and then like invested here, for example, you see ijara, musharaka, investment, all these investments will be matched by a quasi liabilities. You see, it's not really, or quasi equity, sorry. So it's not part of the equity, and it's not part of liability, so they put it as in equity of investment accounting account holders. And if you sum up these ones, actually you almost make more or less towards this, this one. So that's how you see the financial, for example, position of this bank. But if you look to similar bank, they're different. This is Al Baraka from Bahrain. If you look to another bank, I think Saudi, I don't know what's this bank, but it's a Saudi bank who follow IFRS. So you notice they does not disclose they don't disclose doesn't disclose this thing, the Islamic. So what the assets, they make it even very much conventional. There's nothing, show much of, any Islamic, although it's an Islamic bank, but it's almost, there's nothing. So between the disclosure of this and that, you'll find this is just misguiding. How come, you follow IFRS and then give you misguided information? This is very poor, actually, this disclosure does not, even if you read the present value, the PV, future value, even the if future value of, total, whatever. So I think they use even these initials doesn't, really give you an indication of which, what is these items, which one has, belongs to the bank, which was not. But anyway, you can see that this kind of disclosure or accounting practice using IFRS for Islamic are not totally satisfactory. They're really misguiding. So I don't know how people make sense out of it. Okay. So we continue with the one before the last. So now, how to recognize, let's say, account, assets, and recognize revenues and profit. Islamic accounting has a different view about the assets and income or revenue. Why? Because Islamic account is not a matter of decision making. So you see, in accounting, if you the conventional, they said it's we sum up, the transactions and sort them out and bring them into a report, put them in reports and give them decision makers. So decision makers will make decision based on the information given to them. But notice the decision maker actually selective. They want to know certain information in a certain way. Islamic accounting doesn't go like this. They are not dictated by the investors or the owners. They are about equitable distribution of income and wealth. Means that they are trying to be very just. Old kind of, if you remember, if you I don't know whether if you read old, philosophy and theory about accounting, and especially in US, measurement, how to be very much accurate, historical costing, all these things. So why you stick with historical cost rather than present value cost? All this because we are trying to be very fair. So here's fairness is the ultimate almost, or the driver of Islamic accounting. So because of that, why is this important to be equitable and distribute profit and wealth among those people involved? Because you need to, those who have restricted and unrestricted investment, they need to calculate their own zakah. And if you recognize a profit before it is it's not, really not really materialized, the people will pay zakah without, having the real money. So it's like when you accrued profit, you make accrued profit or accrued income, and there's nothing yet materialized based on just time value, okay? So there's a problem. Similarly, if you have, death, inheritance, all these things. So you need to be very accurate here. So the definition from Islamic point of view, you can see assets very much closer to the definition of equity. So I cannot recognize assets unless it's in the hand of the owners. Means that I remove all the obligations associated with it. What's remaining is that assets. This is the asset. So similar to like equity or the shareholder's wealth or the owner's wealth. But in conventional, assets can be anything. All the money you borrowed, your own money or expected cash flow. So definition-wise, you can see actually the assets definition is very much anything goes, so as long you can utilize the benefit of this kind of assets or money, whatever, so that means belongs to you. Then you put it as an assets. In Islamic accounting doesn't have that. So how about revenue? Like what I said earlier, revenue is that because Islamic, most of the transactions are deferred payment. So usually, you have not materialized it, you have not get it, you should not recognize it. But in the under accounting standards, IFRS, they said you should recognize it on the time when you sign the contract, and also you should calculate time value on it. So you kind of forecast the expected money coming in. Why is this important? Because as I said, money, like for example, time value of money is very much, this is the line for survival of all banks. But Islamic banks should not consider payment, deferred payment with any interest until they are materialized. So the consequence is that now the receiving or revenue received will be recognized in Islamic accounting, but those which not been recognized cannot be put into given or used, or you could put it in accounts aside as that they are coming money or whatever, but you are not recognize it until delivered. Okay, like ijara, you don't recognize the house sold or you buy it until you own it. So if you are not owning this, you cannot use it as part of your assets. So if it's not earned, basically it's not revenue. And if it's not revenue, means you cannot give it to the shares, those who are sharing with you, your investors with you. Basically, they cannot distribute inheritance or they cannot give zakah. So suppose I told someone, okay, we make a contract, we're going to buy or sell houses, whatever. And based on the contracts, we can recognize 1 million, profit. So that person, you could say, okay, I can pay my zakah on that, but we have not really materialized it. And suppose we didn't get anything. Can you get your zakah back from the poor or the needy? It doesn't make sense. So you should really wait until at the end. The last point is that when you, just the same point, sorry. So when we talk about basically cash inflow or these elements, so trying to avoid riba, because when you start looking for, or conventionally, when you record the deferred revenue, you record it with time value. The difference, that means there's a riba here, so it's not acceptable. So again, it's, as I said, if you have deferred payment, according to accounting, commercial accounting in banks, they will automatically calculate riba on the unpaid payment, but this is not acceptable. Okay. The last point is that also I noticed that in Islam there is two different concepts. They call al-qarf and dain, or loan. So one of them, in Islam, they are distinction. There's difference between them. In Western, they are almost the same. They are not really conventional. They are not really distinguishing between the two. Qard, when you lend someone, lend him money or give him a discount, a time to pay back the value, but there's no interest, nothing. So they pay the same amount and no penalty. But dain, which is in you remember Surah Al-Baqarah, the dain, Surah Ayatul Dain, they call it. So this is the one here. So there is a liability arise from a contract, a business, okay? So this is matter of two things. So the amount of it could be in settled price, means that I promise to buy thing from you. So I commit myself to buy a product when it's delivered, but the price will agree on it later. So that's also becomes a dain. So the dain is either settled or unsettled or paid or not paid. So it means that if I didn't pay your rent on certain items or on assets, this should be calculated based on the agreement without taking into consideration all these things. They're called time value, all these elements, if you default or not default. So you can see now, according to dain, or the issue of dain in Islamic, that we never accrue profit or gains unless it has been paid, or when it's agreed that it's paid, that means that that's exact amount, but there's no calculation of interest, and also you don't accrue it until it exists. Okay, so I will leave it here, since I know I talk too much or fast, but perhaps if you have any questions, basically you can later you can ask me now. before I just conclude, again, it's just how the difference between IFRS, they consider all, again, they consider all gain or all items or investment instruments, invested instruments. They think that they are liability, but in Islamic, not necessarily they are equal, same liability. So some of them equity, some liabilities. Means, as I said, ijara, musharaka, they have both these elements of equity and liability, because I'm using my money and also using the investor's money. So this is still really a problematic for accounting or Islamic accounting. And then this is for you in the future to really study these elements and see how we reconcile it. Okay, sorry to be in a speed, but if you have any questions, please let me have it. Thank you.
Okay, thank you very much, Prof. Hudayb, for your insightful presentation today about Sharia accounting and the current issues of Sharia accounting. And I see on the screen there is one person that already raising her hand. Yeah.
Okay.
Please, this is, there is student Rina, yeah, Rina Andriani. Yeah, you just raise your hand. Yeah, so you can ask your question, Rina Andriani. Hello, Rina. Why you now disappear?
I cannot hear anything. Is there any question?
Maybe anyone else that want to ask a question to Prof. Hudayb? Okay, Hikmatun Nafi'ah. Yeah. Okay, you can ask directly to Prof. Hudayb. Please open your mic. Yeah, okay.
Okay, thank you, sir, for the chance, and thank you for your insight explanation. My name is Hikmatun Nafi'ah, and I have one question about the difference between the basic principle of conventional accounting and Sharia accounting. We know that basic principle of conventional accounting is substance over form, and basic principle of Sharia accounting is form over substance, which is the two basic principles actually contradict each other. But then there is an opinion or statement about Sharia accounting that actually the substance is the same, but the akad or contract is different. And what do you think about that statement, sir?
Yes.
Thank you.
Thank you, Nafia. Yes, I mean, I present a general idea about the substance over the form. That the Islamic way is that they took the form, the legal contract or the ownership, as the matter of liability, or the one who consider or should be record this the value of the assets on their financial statements. However, if there's a special contract has like this special contract transferred whatever the risk, I'm saying now risk, and the almost the useful life of the assets into the leasee, then that's fine. But as I said, there's a special dealing and special contract that will kind of regulate or make it clearer to between the two parties but overall should not be outstanding like outright. If you have an asset, immediately you recognize the kind of recognize or you are the owner of it. You don't have to write it in your it's like they could off balance sheet transactions, but it's just you're right when you said there's a special contracts, then that's will make the will be the valid issue here.
Okay. How Hikmatun? Is it clear enough?
Enough. Thank you, sir, for your explanation.
Okay. Is there any other question from other participants? Okay. Prof. Hudayb.
Now,
you said that, and all of us, of course, have known already that riba is haram, or taking interest of liability or debt is not is forbidden in Islam.
yes.
And how to overcome the decrease of purchasing power of a certain amount of money that
Yes.
we let's say I have liability in the past, for example, 3 years ago, for example, in $100.
Yes.
But the real value now, the intrinsic value, the real value is decreased, even though the nominal value is still the same, $100. So
Yes.
how to overcome this matter?
This is what the Islamic way, or they do it. They call it the commodity based loan or pricing. So you go to the current market or the current value. So if I give you $100 today, we will go and agree on how much this $100 will buy me a commodity today. Suppose we buy this $100 will buy me, let's say, 100 kilo rice, 100 kilogram of grade A rice. In let's say you're supposed to pay me in 1 year time $100. So in 1 year time, you don't pay me $100. You pay me 100 kilogram worth of so you give me 100 rice, but you don't have to give me the rice. You give me the how much the value of it. So that's the avoiding of riba. Okay. So if you look at the current pricing approach, this is how we do it, or Islamic way. So you don't take the money. I give you a commodity and you give me a commodity. This is what like Rasul said, gold with gold, rice with rice. Okay, so that means because the value of it change over the time. Bear in mind, sometimes 1 year time, the price of 100 kilo could be less than $100. So maybe I give you, instead of giving you like 100 kilo, maybe I have to buy you just 99. So I'll be gaining as well. So that's perhaps we'll take up into the commodity approach rather than the currency approach.
Okay.
Inshallah, I have a paper in about Forex. I'll send it to you, Prof, and then you can share it with your students, which address also the issue of Islamic point of view on that.
Okay, yeah. Okay, so that is an alternative way instead of time value.
Yes, yes. Unfortunately, we don't have. You see, the practice of Islamic valuation and pricing, if we leave it for us or for Muslims, actually they will come up with a better method of pricing rather than the interest rate. But the problem with interest rate, why people like it, or in general government like it, because they are in control. They can control interest rate, and then with that they can control the price. So that means the government will start controlling the demand and supply and the quantity of cash, and that's real problem, because this have an implication on people on the ground and the businesses and pricing. But if you left it for the economic exchange and the demand and supply, the natural way, you find actually the price will not go, inflation almost will disappear, because people will exchange values rather than exchanging currency. That's the real problem. You see, look what happened to US now when they increase the interest rates. Inflation is so high, and then increase the inflation interest rate, and then what happened? The prices start, going up. And then people start, people instead of, getting better, they, the pricing is now rent increased, mortgage, people cannot pay now because now interest rates increase. People who want to have more money will borrow money to pay other debts, they cannot. So it's getting very, it's not a solution, this time value. It's really problematic.
Okay, thank you very much, Prof.
Okay, nice being with you. Inshallah, I will, if I have any chance, inshallah, I'll meet you in person, or if I come to Indonesia, inshallah, I'll meet you. And from now, inshallah, be in touch. If you have anything, please let me know.
Okay. Okay, thank you.
Okay. So, yeah.
Is there any other question from other participants?
The material is very high, I know, very dense and very kind of rich. Let them read them. And if you have any questions, please send me by email, or, there's one chat here I can see.
Oh, okay. Yeah. Okay, Indah Mulyawati. Yeah. Okay, you can.
Assalamualaikum warahmatullahi wabarakatuh.
Waalaikumsalam.
Thank you for the opportunity to ask maybe simple question. Professor Hudeb, can you explain about trading of currency in Islamic accounting? Is there a rule, the specific rule, how to state in financial report, or institution or the company who adopt Islamic accounting is forbidden to take an action to currency trading? Thank you.
I see. Okay. This with regard to trading, there is two in the paper I published. Inshallah, I will send it to you, through Novel. There is two issues here. There's a hedging purpose, for hedging purpose, and there is for exchange. If you buy it, it's halal. There's no problem. You buy the currency. For example, you buy rupiah to US dollar and Malaysian ringgit. Generally, principally, it's okay. There's no, I didn't see any haram in it or any riba, because this is a commodity, still can be seen, exchanged. What make it to be haram? This is what I explained in the paper. There's a hedging and there's a strategy, and there is like buying some kind of a problematic where they start buying in kind of with interests. So there is a riba involved. And unfortunately, accounting standards and also Malaysian regulations, I think the IFSB, they call them, they don't really close this issue. So we highlight it in the paper, but overall, money buying and selling exchanges, it's okay. I think it's halal, no issue. Except when you start buying and in the future and you start putting some kind of interest on it or hedging, but with them kind of, there's a riba involved. Means you try to, you are not really taking the risk almost. So you pass all the risk to one party. Inshallah, I will send the paper to you.
Okay. Indah Mulyawati, is it clear enough and answer your question? Yeah.
Yes, it's enough. So it's when it's hedging, it's halal, it's okay, Prof. But if their content riba, it's not okay.
But sometimes they use options. The put option in a sense, for you will, for example, guaranteed, someone come to you and guarantee an exchange rate with a specific amount of money. So if you put that and you guarantee the exchange rate in the future, the question is it halal or haram? In my view, when we study it, we find it's not acceptable. It's not Islamic. So I don't know how, unless you justify it from some reason for you buy it as a part of the you buy it without putting an interest on it or putting a cost into the exchange. So by doing that, you are forcing the price and you pass the risk to specific the parties. Change or this type of currency exchange is not acceptable. In our paper, we argue in that. You will see it, and if you have those who have, of course, what the reviewers, when they look at this one, what we did, because most of the conventional or the Islam conventional practice, they are using it. They're using this hedging strategy, but this hedging strategy actually becomes a business. I make people feel that the exchange rate will be very bad, so you are kind of pushed to buy an option, which you find actually the exchange rate getting better for you. So that's practice. It's like the gharar, become more of gharar. Gharar becomes like slightly, how do you say it? Huh?
Speculation, high speculation. No.
Yeah, speculation, exactly. So that's the problem. In Islamic, we try to end up this. So make a demand and supply naturally, not in speculative. Yes. Okay.
Okay, yeah. Okay, seems there is no more question. Okay, if oh yeah, Mario Yosafat Tiardo Marfaung. Okay, please. Yes, we have a question. Yeah, Mario Yosafat. Yes. I cannot hear your voice.
Mario
Yosafat.
Your question? I cannot hear you.
We cannot hear your voice, Mario Yosafat. Or maybe you can write in the chat room. Please write your question.
I cannot see anything.
He got problem with his microphone.
Okay.
Now it's seems he's still writing his question in the chat room. Silakan ditulis pertanyaannya, Mas. Okay, while we waiting next question, maybe I okay. Of course. Okay, so this is a question from Mario Safat. Yeah.
What's the question?
Question is
Is
in
it Indonesian?
Let me translate it to you. So, if we have a contract and doing hedging, yeah, because we buy something in other currency, yeah, in from other in other currency from other countries, yeah.
Mhm.
Is it still forbidden? So
No,
for hedging actually, yeah.
you can answer. You can answer him, no problem.
Yeah.
No problem. Islam is not. When you buy currency itself, it's halal. The currency, if on both in demand is, but it's not like speculative, not speculating. But if I make a contract, I want to buy now from you, from Indonesia, I need to buy rupiah or pay in rupiah, that's fine.
Fine.
Yeah, I think it's
Something in dollars and
yeah, dollar, any currency is acceptable. But I cannot tell you, for example, a dollar exchange today, well, let's say in the rupiah exchange, maybe $1 exchange for 1,000 rupiah. But when I'll tell you that the dollar, the exchange of dollar, I'll put it 110 for you. This is not part of the exchange. This is now, you need to justify why you're putting higher. So unless you said there is a risk or whatever. So, but this is now, again, it's not acceptable because I know I can buy it from the market. So why should I buy from you in that much? So, but in general, you can buy currency and sell currency. Like buying gold and selling gold with the currency is fine, but not controlling the price just to utilize your need or exploit your need.
if the case like this, for example, if I buy a dollar, but and then I keep it for example 3 years, and then I sell it in the next 3 years, is it okay or not? The purpose.
Yes, yeah. But most now you don't know whether you are taking the risk. You don't know whether you will end up with a better exchange rate or worse. It's like when you hold Chinese currency, you hold Malaysian currency, US dollar currency. Is it going to be better for you to hold it in a commodity? Is you buy, let's say, a product with it, or you change it, will use the currency. So it's still, the value of it has a value, but you are taking all the risk. You see, the problem is not like exchange now. The problem always will become haram or not haram, the contract. Or the issue that if someone will utilize or exploit the need. That's one thing. In Islamic is not acceptable. The second, when I recognize something, like when he said, I have $100, I'm going to record it as 1,000 rupiah now. But we don't know that this is utilized or not until you exchange that US dollar. Then you see how much rupiah you got. If you record that $100 as you decide on that this is like you need to take the difference of exchange. This is even from conventional accounting. This is not, it should be treated in a kind of adjustment. but nothing to do with this Islamic now. Islam is that when there's exploitation, you need to know, is there anybody make gharar, exploitation, someone making interests? So you have to check to the fundamental points in Islamic. If it's free of these things, that's fine. Islamic agree with that.
Okay, thank you very much.
Okay.
Yeah.
There's no question, we can conclude today.
Okay, if I may conclude from your presentation. So nowadays, conventional accounting so massively implemented in most Islamic countries because of colonization in the past from Western countries, as you wrote in the early of your slide.
Yes.
For centuries. So that's why now almost all Muslim countries practice conventional accounting and also economic as well.
Yeah. And G20, for example, G20 make it worse for Muslims to force them to follow conventional accounting. G20 put pressure on Indonesia, they put pressure on Turkey, they put pressure on Saudi. You must follow IFRS, they say.
Follow IFRS, because now IFRS standard.
Yeah.
And hopefully, okay, maybe last question. Can you give us tips from that the research opportunity in the under topic of Sharia accounting, maybe for our student here?
What is it?
Research opportunity. I mean.
Oh, research.
Opportunity, right? Yeah.
All you see the points I put in the slides. First, you could study disclosure. If you look to the financial statements in banks, especially Islamic banks in Indonesia, and you want to see how they, how clear is it for the people? Suppose you take the financial statements and you show it to someone who interested in Islamic investment and see whether the disclosure is good enough or not. In terms of narrative and in terms of item. Remember I show you two? So do they really show them, proper disclosure? That's number one. Number two, how the policies of Islamic accounting followed? Means that what is the disclosure information like? What policy of recognition? What policy of investment? What is, how they share profit and loss? So that's one thing. But if you go and study also the influence of G20 in Indonesia, for example, what's the, how, IFRS different from the Islamic, you go to the items they give, the 7 items. So you'll find the IFRS, for example, measurement, and you can write a report or research on how the measurement, fair value might be different from Islamic, So the idea can come from the slides I show you. Perhaps, the 7 items, each one can be a good topic.
Okay, thank you very much.
Okay, Brother Noble.
Okay. Hopefully now our students enlightened enough and will doing research in Sharia accounting.
Yeah, inshallah. We'll have more.
Okay, and we have still one program, but limited with our lecturers in Faculty of Economics, accounting, especially in accounting department. Yes. And I will arrange the program and will inform. Okay, and I think enough for today, and give big applause for that.
I have a lecture coming. Actually, now I have my lecture. And if you have no questions, I would like to end the meeting today. If you have any follow-up, let me know, including your programs on this thing.
Okay, yeah.
Okay.
Okay, thank you very much, and
Okay.
and this session, and have a nice day for you all. Yeah. And Assalamualaikum warahmatullahi wabarakatuh.
Alaikum salam. Assalamu alaikum.
Wabarakatuh.